can use them as POI. See this? Now, if I put a line chart in here, can you see a little spike in here? See that? There's a little spike in
Yeah,
here
yeah.
because why? The line chart only prints the closing prices. Okay, so this right here will be that price level. Now, I told you a higher time frame order block is a lower time frame breaker block, right? Now, if I go to the H1, what do we have? I told you
Breaker.
the last bearish candle before the up move is what we call the breaker block, right? Or else just use a line chart, you will see that this is where the last push up began before the push down. Can you see that? See?
Yeah.
Very clearly, this is where the last push up began. And also now, if you understand about these opening and closing prices, you can do some good refinements, okay? Because look at this. This price level, not huge refinements, okay? You're not going to take this and then take it here. That's too much. That's too much, okay? You're not going to do refinements like that. You can do a slight refinement. Maybe take this level into here. What is this? The rejection block or is the open close levels. Can you see that? The closing price of the
Yeah.
bearish candle. Because this right here is still unmitigated. It's fresh. Can you see that? Okay, so something like this. So what
Yeah.
happens? Where does the market come into? Right there. And it drops. See that? So it's very important. Now remember, like you're not going to use every single A and every single V as a point of interest. Okay, remember that very well. Okay, you're not going to just for the sake of it, you're not going to use all of it like this. Main thing, what is it? It has to have liquidity below it. Then you can expect this. Can you understand that? Then you can expect this. Okay, so same thing in here. You're not just going to randomly use a support just because it is a support. Okay, because now in here, for example, do you think this one will hold? No, because one thing, the market is still bearish. Okay, the market is still bearish. Let's talk about ranges and all that stuff later. But what happens? Through it, straight through it. Because why? When the market is bearish, we're not going to mark out supports. Okay, we're going to mark out resistances only because can you see what's happening in here? All of the resistance are still unbroken. See,
Yeah.
this tapped here.
Safe.
See, this tapped here. Okay, how many entries do you have? This tapped here. Because why? The market is bearish. See that? So entries will be very easy once you understand the direction. So let's go through direction later. Let's go through direction later. I'll only show you POIs right now. Okay, so same thing in here. For this to be a valid or as a proper POI, it has to have liquidity above it. Then you can expect this. Can you understand that? Okay, it has to have liquidity above it.
Yeah.
I'll show you more examples. Okay, I'll show you more examples. So you saw the reaction from here, right? Taps and then it starts to melt. Okay, because it is a 4-hour level too. So let's see some more. Let's see some more examples. Where do we have? Yeah, in all these areas, we do have these rejection blocks and all that stuff because, like, even Friday's news, where did EU tap into? Where did EU tap into? Let me show you. Okay, look at this. We had a swing low in here. Okay, we had a swing low in here. That could be liquidity. And right below that, what did we have on the 4-hour time frame? Right below it, we had a rejection block. Can you see that? Open close levels. You can see that, right? Never tapped into it. Okay, so where did news tap into? Where do you think news tapped into? Look at this. There it goes, flies. See that? Because I told you those levels are very strong. Okay, those levels are very, very strong. So I'll show you more examples. Let's see. Go to GU. Like remember, like we're not gonna just focus on every single pair. Okay, it'll be EU, GU, and gold. Okay, EU, GU, and gold. Those are the pairs that I trade. Okay, so I'll show you. Now look at this one. We have a nice example in here. Okay, look at this. If you go to a lower time frame. Now I'll ask you a question like, what's the most recent major breakout structure we have here? What's the most recent major breakout structure we have here? This one, right? Right here.
Yeah.
From here. So what is it? It's a bearish break, right? It's a bearish break. Very
Yeah.
clearly, it is a bearish break. The market is still bearish. So remember, when the market is bearish, every time it goes up, why is it going up? It's only a pullback, only a retracement. Okay, it is only a retracement. How do we know the retracement is over? Once again, the counter trend has to do the same thing as the major trend. So how do we know what the major trend is doing? The major breakout structure. Okay, the major breakout structure shows us what the major trend is doing. So now what happens? When the counter trend is also doing the same thing as the major trend, we know that the pullback is over because now look what happened here. Higher highs, higher lows. Now I'm drawing the counter trend. Higher highs, break. Can you see it? There we get the break. So what is this? This is the formation of a strong high, right? That's the formation of a strong high. Okay, because
Strong
why?
high.
Yeah, structure was broken here. Not with these wicks, but once we got a body closing here. Okay, so only with this closing, we consider this to be a breakout structure. Then this turns into a strong high because liquidity was also taken out before the breakout structure. So now remember, this is what we do all the time. When a lower time frame strong high is created, okay, we always go into the higher time frames to check what our point of interest is. Okay, so now on the 1 hour time frame, this right here is what? This is a strong high, right? That's a strong high. Okay, so then what can we
Yeah.
do? We can go into the higher time frames to check our point of interest. If I go to the 4 hour time frame, okay, if I go to the 4 hour time frame, what do we have? What's the point of interest? Rejection block or else the resistance. I told you, right? This is the formation for
Yeah.
a resistance. Okay, and I told you this would be a valid or this would be a high probability zone if it has what? Liquidity below it.
Liquidity.
Okay, so strong high, liquidity. You will see how consistent this setup is. Okay, you'll see this happen all the time. Liquidity. Now, first thing, strong high, liquidity below it, higher time frame point of interest. Since the market is still bearish in here, we can sell it like this. Look at this now. We're still on the 4 hour time frame. Okay, we're still on the 4 hour time frame. Where will we place our stop loss? Above the strong high. So 2.5 pips. Okay, so still on the 4 hour time frame. Okay, still I'll show you more examples. Okay, not just a one time thing, it happens all the time. Okay, so there we go. There we have a 2.5 pip stop loss, but obviously you can't do this with spreads, so you'll have to at least have maybe something like 3.5. Okay, you'll have to factor in the spreads anyway. Okay, so for targets, your first target can be that day's Asian low, or else maybe the external range liquidity that is in here. So stuff like that. Okay, I'm not talking about targets, we're only talking about POIs in here. Okay, we're only talking about the points of interest. So what happens? Look at this. Look at the precision. Right into it. See that? Right into it, and what happens? Melts. Okay, yeah. You can check my channel out for this entry, this same exact entry. So what happens? Taps, and then it melts. But do you think anyone will have an idea where the entry came from? No idea, right? Because there's nothing in here.
No idea.
Nothing in here. So I told you it is a resistance. Okay, we're focusing on this resistance, and it is a strong one because why? It has liquidity below it, and it was also on a strong high. Okay, so this right here will be a very consistent setup. Strong high, okay, liquidity below it, and the
Yeah.
rejection block or as the resistance. Okay, same thing like this. I'll show you many examples with this and this. Okay, liquidity, strong low, support. Okay, so you
We
can
can
see this.
do it
Yeah.
any time frame. We can do it any time
No,
frame.
no, no, no. Let's talk about time frames later. Okay, because you
Okay.
can
Okay.
do this on any time frame. Okay, but you're not just gonna use the 50 minute or the 30 minute all the time. Okay, or the 1 minute or the 5 minute. Okay, because you know how messy the lower time frames are, right? We can't read it
Yeah. Yeah.
properly actually. Like it's not that easy. It's
It
not that easy. It
confuses the
takes a
lower.
lot of practice.
It
Yeah.
confuses.
Okay. So it takes a lot of practice and back testing and understanding and all that stuff. But still, we can be wrong. Okay, but once you stay on the higher time frames, it will bring you more clarity. Okay, it will bring you more clarity, and you're not just gonna take a trade and then close it with like 10 to 15 pips. No, you're gonna hold it for a long time because why? You're trading on a higher time frame, so the pip count will be higher.
Yeah.
Okay, so I'll show you more examples of this support and resistance stuff. Okay, because it's different. Where else do we have three examples? Look at this one. Clean. If I put the replay tool here and go to a lower time frame, let's talk about time frames later. Okay, I'm only showing you examples of POIs, so the like
Okay.
don't confuse anything. Okay, let's go through it one by one. Look at this. What's price doing? Creating higher highs, higher lows, higher highs, higher lows, higher highs. So obvious, right? What will everyone expect? Higher low, higher high, right? So
Yeah.
what will they do? They'll tell you, oh, there we go, a demand, right? Or
Yeah.
as an order block. Okay, so let's buy it here. So smart money is buying it here. Supply and demand is buying it here. Who else? Trend lines. Trend lines are buying it here. Everyone is buying it here, right? So is it safe for us to buy it here too with our stop loss below that low?
No.
No, not safe at all. So
No.
what we do is we identify the liquidity and then we look for a point of interest below it. Okay, so now if I go to the H4, what do we have right below it? A support or else a rejection block. Call it what like yeah, what do you want to call it? A support or else resistance or else a rejection block or odd block. So the IKC terms. I prefer calling it supports and resistance. Okay, or else open close there. So that's better because it's not that confusing. Okay, so we have a support. We have a support in here. And also I told you about this, right? Just now I told you
Yeah.
about this setup right here. Use a line chart. Isn't that the setup we have here? Isn't this a
Yeah.
strong low now? See that? Strong low, okay? Liquidity above it, and there we have the support. See that? There we have the support,
Yeah.
untested, unmitigated. And yeah, now if you want to, you can even do refinements of these POIs. Okay, so you can even maybe drop into lower time frames and then do some POI refinement. So let's see. I told you, right? A higher time frame order block is a lower time frame breaker block. That same way, a higher time frame rejection block can be a lower time frame order block. Okay, now on the 4-hour time frame, what is this? Just a support, right? A rejection block is the closing price. But if you go to the 1-hour time frame, yeah, once again, even on the 1-hour time frame, it is a support. But let's check the 30-minute. What is it? A clear full-bodied order block. See that? Okay, that's why I told you, like, once you switch time frames, you will get a different view of it, because you can call it a rejection block. I can call it an odd block. None of it is wrong. Okay, so the best thing to call it, just call it a support. Okay, so that's, and yeah, let's check how we can refine it maybe. Yeah, look at this one. On the 50-minute time frame, like, I'm not going to take this price level and then move it here. That's wrong. That's too much of a refinement. Okay, so that's not even refinement. You're completely changing the zone. Okay, so refinements has to be like around 2 to 5 pips from the zone. So maybe you can take this level and then move it to somewhere around here. Open close levels. Can you see that? Okay, so somewhere around here. Yeah, and then what you can do is maybe from when everyone else is buying it here with their stop loss here, we can buy it here. See that? We can buy it here now. We can buy it here with our stop loss below the the rejection block. See that? So you have around 5 pips. You have around 5 pips below that low. And then where do you target? You target the external range liquidity. Okay, you target the external range. Okay, now what is everyone else doing? Buying it here, right? Everyone is buying it here. Okay, so we know that everyone is buying it here. So now look at the reactions though. There we go. Buy it, buy it, buy it. Everyone's buying it because look at the reaction, reacting from the zone. But when the time is right, smart money steps in and then bam, everyone is taken out. Then we enter the market. Okay, once everyone is taken out, that is where we enter the market like this, because there's no more liquidity to be taken out, right? They have already taken out that majorly, the trap or whatever you want to call it. They have taken out that low. Then what happens? Then it flies. See that? Okay, so what happened? What happened? You see that, right? You see it. It came from the 4-hour support. Why? Because it was a strong one, since it was on a strong low and it had liquidity above it. You see that, right? So that was a nice example. So I'll show you some more. Let's see. Yeah, let's get back into those price levels itself. Where were we? Yeah. Now look at this one. Another one. Let's go to the lower time frame. Okay. Okay. Now if I go to the H1 time frame, let's go to the H4. Okay, there we go. Now can you see that? What is this? Liquidity. Equal highs, right?
Yeah.
Equal highs. So are you going to go to a lower time frame and then mark out an order block in here and then sell it? No. Okay. We'll have to look for a point of interest above the pool of liquidity. Okay. Above the pool of liquidity. So what do we have right above this? We have a rejection block on the H1. Open close levels. Okay. What if you do this? What if you do this? Sell it. Stop loss above that. What if you do this? Let's see. Stopped out. Why? Why did that happen? Okay, so remember, it doesn't matter how clear your lower time frame POIs are. Okay, you're not going to use them unless you check with the higher time frames. Because remember, when you spot the liquidity, what you should do is you should go to the highest time frame to check your point of interest. Okay, like most people will start marking out the POIs from the 1-minute time frame. Why? To get a tighter stop loss. Okay, so they'll have POIs in here, they'll have POIs here. Like when they get the right trade, they will not even have money in their account. Okay, because why? They're losing it. Okay, so don't do that. Always start marking out your POIs from the right side of the time frame. So check the monthly, maybe there's nothing on the monthly, check the weekly. There's nothing on the weekly, you can check the daily. Because when there is something on the daily in here, let's say in here, can you use something on the 1 hour in here? No, what's stronger? Obviously the daily, right? Obviously the daily. Okay, so now look at this. Above this, if you go to the 4-hour time frame, what do you have? Where's your point of interest? Here.
Just
do you have anything in here? No, there's nothing in here. Okay, so what would you prefer? Like the 1 hour is the 4 hour? Obviously the 4 hour, right? So refine it to 4 hour. Okay, refine it to the 4 hour. So what happens? What happens? Now it goes into that. See that? Now it goes into that. And also now, always just check the line chart. Okay, because I did not take the sell. I'll show you the trade I took. Now, can you see that? This candle right here, with this top hunt, it has also closed above this swing high. Can you see that? It has closed above this swing high. So which means this low now turns into a strong low. Liquidity taken, structure broken. Use a line chart, you'll see it very clearly. See that?
Yeah.
We have a strong low. So now if it is a strong low, can I take a sell in here and then target a strong low? No, right? It might react to a strong low. Can you understand that? Like we
Yeah.
can't directly target a strong low. So you should have safer targets. Where are your safer targets? You have equal lows. There we go. We have good targets. Okay, we have good targets. Now, once again, like I told you, I did not take the sell. I'll show you the trade I took. If you go to the 4-hour time frame, what do we have? Now, once again, we have this formation I told you about. Boom. You know what happens when we have this. See, stop fund, breakout structure,
Yeah.
strong low, liquidity above it. What is this? A support, right? Or as a rejection block, whatever you want to call it. Like this. Okay. Then what can you do?
Yeah.
You can buy it. Okay, you can buy it here. Where will you place your stop loss? Below the strong low. 3.7 pips. See that? 3.7 pips. Like what more do we need, right? 3.7 pips. Like, because even if you go to a lower time frame, this is like the tightest stop loss you're gonna have, right? Okay, we know that. So if you can get it from a higher time frame, what's the purpose of going into the lower time frames? Some people I see they're even using the second time frame. Okay, so don't do that.
Yeah. Yeah.
Okay, if you're doing that, delete them. Okay, because they are messy. We can't like trust me, we can't. Okay, we can't read them like that. It's hard. It's very hard. Okay, because just think of this. Just think of this bullish candle only. Okay, just think of how the inside of this bullish candle would look like on a 30-second time frame, or it's on a 1 minute time frame, right? We might have this and the breaks. You might want to sell it here, but price goes up because why? It is reaching this pool of liquidity. See that? So lower time frames are very messy. Okay, stay on the higher time frames if you want more clarity. Okay, so what happens? Look at the drop from that to this. Okay, now don't worry because this is a strong low. Test liquidity above it. Now look at the reaction. Goes back up. See that? It goes back up. But once again, can I target this strong high? No. Use a line chart, you'll see why.
No.
Because it is a strong high. Liquidity is taken out. These are broken.
Breakup section.
Okay. Just go to a 1-hour time frame. You will see it very clearly. Can you see that? Very clearly,
Yeah.
liquidity is taken out in here and structure was maybe broken in here. So once again, what do we do when there is a strong low on a lower time frame? I told you we go to the higher time frames to check our point of interest, right? When there's a strong
Yeah.
low on or a strong low or high on a lower time frame, we always go to the higher time frames to check our point of interest. So on this strong high that was created on the H1, what do we have on the H4? What is this? A resistance. Can you say same exact thing? A resistance.
Yeah.
Okay, we have the rejection block, whatever you want to call it, but something is missing. What's that? No liquidity below it.
Liquidity.
See that? No liquidity below. But yeah, it did play out from this zone. Okay, but I did not take the sell. I only took the buy in here. And also I closed it out at 50 pips. Okay, so just 50 pips. Okay, so because I did not hold it directly up to here. So what happens? Look at the reaction. Boom. Look at that. Okay, and this right here, this could have even been a better entry because one of my students took this and sent it to me, I remember. I think, yeah, look at this. He refined this 4-hour zone into what? Into the 15-minute support that was over here.
Yeah.
See that? Okay,
More
so then,
refinement.
yeah, so the entry would be even better. See that? Even a better entry like this. What happens? There it goes. See that? There it goes. Okay, there it goes. And then look at the reaction from the top one too. Yeah, it did play out from the top one, even though there was no liquidity below it. Look at the reaction. Can you see the precision? Still on the higher time frames. Okay, still on the higher time frames. So you don't have to go to the lower time frames. Okay, just completely forget the lower time frames if you want to increase your win rate. Okay, stick to the higher time frames because you don't want to like. The thing is, like I used to play on the lower time frames too. Okay, like when I did not have a proper understanding. But you see, like once you take so many losses on lower time frames, you become frustrated, right? You think like
Yeah.
this shit is not gonna work. Okay, you just completely try to give up. But stay on the higher time frames, you'll gain more confidence. You'll gain more confidence because your direction is right, your POIs are right, and all that stuff is right. Okay, so make sure you stay on the high time frames. And like the thing is, like, do you think anyone will have an idea where these entries are coming from? No idea, right? Look at the
No way.
and did I even go to a 1 minute or 5 minute time frame? No, but look at the precision. See that? Okay, you don't have to. Okay, you don't have to. So I'll show you more examples. That way you will understand it. Okay, so let's see about POIs. Yeah, let's get back there itself. Let's come from here to yeah, and also like I'm not gonna tell you it's gonna give you sniper entries every single time. Okay, like sometimes we will have this set up very clearly, but then the market does this. That happens. But as long as you know how to manage your risk, okay, you do not have to worry about the losses. Okay, so
Yeah.
that's the thing. You don't have to worry about the losses because see, like for example, yeah, here we go. A nice example. See, what is this? This is a strong high, right? Liquidity taken. Okay. Structure broken. Perfect. Strong high. We have liquidity below it.